The Apollo Crypto Fund estimates that Bitcoin could add $3.2 trillion to its market cap through the Bitcoin spot ETFs if those become a reality. And honestly, we'll find out soon enough in like 2 to 3 weeks. So what does this mean for price? I'm not going to tell you. I'm just going to show you through a magic variable called the Bitcoin multiplier. This was discovered in a report released by Bank of America, which basically tells us for every dollar that goes into Bitcoin, how much does that raise the actual price? I'll give you a hint. It's a lot more than $1. It's actually crazier than you think. And if you're bearish and you're still a bear in 2023, probably should stop watching here. Here's something you probably did not know. So for every dollar that goes into a stock, ETF, or a crypto coin, it pushes the price up by more than that dollar. This is called the multiplier effect. So if a stock goes public today and by market close, it's valued at $50 million, that does not mean 50 million actual dollars were spent buying the stock. Let's say it was $10 million net purchases. So that gives us a 5x multiplier. Some assets can rise much more quickly with less net purchases. And that is why the Bitcoin multiplier is so interesting and probably why Bitcoin is so volatile. Bank of America released a report and estimates that the Bitcoin multiplier effect is 114x. So they claim a net inflow of $93 million raises Bitcoin's price by 1%. For comparison, it takes gold 20 times more money to raise its price the same 1%. So before we go estimating Bitcoin's future price, let's clarify something. When the price of an asset goes up, it just means that there's more dollars buying it than selling it. Pretty simple, right? There will always be sellers and buyers no matter what the price is doing, but the price is dictated by which of the two sides is dominating. And when there's less sellers, that multiplier effect we talked about gets higher. Let's pretend like Bitcoin trading volume today was $200 million. If $146 million of that was from buyers and $53 million was from sellers, that gives us a net inflow of $93 million that was injected into Bitcoin's purchases, which using the BOA multiplier would make Bitcoin's price rise 1%. All right, so let's see how much net inflows it would take to raise Bitcoin's market cap by that $3.2 trillion target that Apollo Crypto estimated. By the way, that would equal $200,000 per coin. For clarification. Well, we have to look at the size of the current ETF market and go off that. Why? Because a spot Bitcoin ETF is basically the first ever pipeline bridging a crypto asset to the big money market of traditional finance, allowing anyone to buy Bitcoin through the same platform that they buy their stocks, which means people can add Bitcoin to their 401ks, to their retirement accounts. Fund managers can buy Bitcoin on behalf of their clients through the biggest trusted names in finance, such as Blackrock, Fidelity, ARK Invest, etc. These big trusted names are going to be doing all of the technical back-end work that it takes to own Bitcoin, so the buyers don't have to, which makes it super easy to get frictionless exposure to this crypto asset. By the way, for reference, let me show you the scale between crypto and just the US stock market alone. We're not even going to get into the global stock market because that's what we really should be comparing it to, since Bitcoin and crypto are global assets. But the US stock market is valued at about $45 trillion. And as I'm recording this video, the crypto market cap is about 1.7 trillion. Basically, crypto right now is like Lake Michigan, and we're about to start flowing into the Atlantic Ocean, for reference. Side note, shout out to the Apollo Crypto Fund for putting this report together. Really cool stuff in here, so let's just dive in, waste no time. All right, so first let's take a look at the amount of equities that US households and institutions hold, right? If you look at this column, the 2022, this is the most recent data. US households accounted for $26.3 trillion in equities, and institutions accounted for $38.3 trillion in equities. And all these, by equities, I mean stocks, ETFs, bonds. You can see all the different categories, right? More importantly, the ETFs that institutions hold can be seen in this row right here, and they equal about 5 trillion. When you add household ETFs as well, it comes out to about $6.5 trillion market cap for the US ETF market, which is quite a bit. And it's also growing at a super fast rate. What I like about Apollo Crypto is that they were pretty conservative as far as their estimations. They assume that on average, 10% of these investors in the US will have some type of interest towards a Bitcoin spot ETF. And out of those 10%, Apollo is estimating that they will allocate up to 1% of their portfolio to a Bitcoin spot ETF, right? So when you take 1% allocation from 10% of the participants, that gives us a number of $65 billion of inflow, right? So now when we add the multiplier into this formula, how much can this push up the price? Let's say if it was over like a 1 year, 2 year, doesn't matter the time frame, right? How much could 65 billion of net inflow push the price up. All right, so let's put it all together, right? They believe that with $65 billion of inflow to Bitcoin ETFs in the coming cycle, applying that 50 times 50x multiplier effect, which remember is cut 50% cut in half from the original Bank of America multiplier, would lead to an increased market cap of $3.25 trillion, in which case we would see Bitcoin trading at $200,000 per coin. They also have the disclaimer, which is smart. We realize this is a bold statement with a lot of uncertainty. Bitcoin at the time of this writing is trading at approximately $42,000 USD. And then they go on to also make an estimate for Ethereum's price, but it's not based so much off of all the other math. It's more so of the ratio of how it outperformed Bitcoin in the last cycle. But to be fair, as an Ethereum holder, ETH did fall much more than Bitcoin did leading up to the previous bull market. So that is why in the bull market, it outperformed Bitcoin. But okay, so they use the ratio of, Bitcoin maxed out at its all-time high and Ethereum maxed out at its all-time high. So applying that same ratio, if Bitcoin were to go up to the $200,000 per coin that they estimated, they're saying ETH would reach about 22,000 US dollars. Now, take that as you will. It's not so much based in math as much as the Bitcoin one was, just because, we have all the ETF numbers, the flows, et cetera, et cetera. All right, so all in all, we are going to have a very exciting and probably volatile month in January. I'm recording this December 26th, so it's about 2 to 3 weeks out, probably 2 weeks out from a decision, which could be any weekday in the first 2 weeks of January, right? I think the end date, the final date would be January 10th, but we'll probably get something before that. So I'm as excited as everyone else is. Kathy Woods of ARK Invest recently said in a podcast that she believes, not to jinx it, but there is about a 95% chance of approval, and she's the one that has been talking to the SEC and that entire agency. So also, I like to stalk the Twitter likes of the Grayscale CEO and see what he's liking, what tweets he's liking, and from that alone, it seems like he is very confident in an approval coming in January as well. And these are the people that are talking to the SEC, right? Filing applications, revisions, going back and forth. So I'm basing all my confidence from them. All right, guys, that was it for this video. It's always nice doing some moon math and seeing how high our coins can go. And if you are into crypto at all, ETFs will be great because this will be a stamp of legitimacy for the entire space, and not just Bitcoin, but that is a great start.